What's up, Bat fam? I hope everyone had a great week and a fantastic weekend. This is going to be the weekly market news and technical analysis. Since I missed the Zoom call this morning, there were technical difficulties with my Wi-Fi. It was heavy rains in Seattle and it was not working for a little bit. There was a little bit of an outage in my general area. Got a text message about it and had to wait till it went back online, unfortunately. Now, so without further ado, let's get straight to it. We're going to start with the news, as well as do some technical analysis on the pairs that we normally cover, which is the Nasdaq 100, gold, and then we're going to be going into Bitcoin and XRP. And this week we might cover, or actually not might, we are going to cover the Australian dollar, AUD.
All I do is daydream. They been sleeping on us, I'm just trying to see what they...
So first things first, let's start with the news. So Sunday market open, we're going to see, well, 2 hours into the market open, we're going to see Chinese yuan 1 year and 5 year loan prime rates. That data is going to be coming out, as well as on Monday we're going to see a few hours into New York session, Bank of England Governor Bailey speaking, and in addition to that, we have consumer confidence for Spain 3 hours into London Open. We have Conference Board leading index, and as you can see here, the same exact news event, Bank of England Governor Bailey speaking as well. So Monday may be a bit of a busy day, but not quite as volatile as it will be later in the week. On Tuesday, we have consumer price index for the Canadian dollar. In addition to that, we have existing home sales for USD, and 1 hour after that, we have European Central Bank President Lagarde speaking as well. Not only that, we also have FOMC meeting minutes being released shortly after, all on the same day on Tuesday. Tuesday is going to be a very, very volatile day, so be prepared. And as you can see on daily effects, we can see the exact same news events. So be prepared. Tuesday will be highly volatile with heavy news, high impact news events. On Wednesday, we can see Reserve Bank of Australia Governor Bullock speaking 35 minutes into London Open. We have European Central Bank Financial Stability Review, autumn forecast statement, GB for GBP, unemployment claims for USD. That's going to be the most important thing on Wednesday. New York Open. Shortly after that, we have Bank of Canada Governor Macklem speaking as well. Thursday, lots of high impact news as well, mostly all during London session, not too much during New York on Thursday. And Friday, we have lots of news throughout London and New York session, with that being the German IFO business climate. We have the European Central Bank President Lagarde speaking, and core retail sales for the Canadian dollar. We also have flash manufacturing Purchasing Managers Index data coming out as well during New York Open. As you can see, lots of high impact and medium impact news throughout the whole entire week. Now, let's get into the more important things, such as the analysis for the week. So, first things first, we're going to look at the Nasdaq. The Nasdaq analysis has been pretty good. However, we have not traded the Nasdaq in a little while. Last week we mainly traded gold, which I'll go over that trade and the analysis as well here shortly. So as you can see, let's go on to the right hand chart, the monthly time frame. Monthly time frame, we are breaking above the July highs here. We just pierced above them, and the month of November you can see a strong bullish candle. We've had a strong bullish rally all month long. So let's drop down to the weekly time frame if we can see more details here. So when we look a little bit closer, we can see that we're in an area of supply. We have exhaustion, however we close strong bullish. Now we need to see on the lower time frame here, on the left hand side, we're in the 4 hour. Let's go a little bit higher. We'll start on the daily. We can see that this is, the previous week's low is right here. Wait, Monday, Tuesday, Wednesday. Yeah, previous week's low is this little bearish candle, but overall a bullish confirmation pin bar type of candle. We're going to mark that off with the previous week's low. Start with that. can see right below here was the previous month's high. The month of October, this was the high we broke above, and we've just been continuing bullish this entire time. Now this is Thursday's low. This is pretty important. This is where structure currently is, and this is it's a minor area of support, but it's also an intraday level of support as well. So it's crucial for this particular area. So let's zoom out some. We'll go to the 12-hour time frame here. I have my EMAs on just to give me a general direction of the trend. However, I don't really focus on them too much. I don't really rely on them for anything. It's primarily for the price action, and then the EMAs just happen to line up. They just aid analysis. That's all it really is. As you can see, the EMAs have been following price pretty closely. Even when it's ranging, you can see that the EMA does not move as it typically does in a trending market, as it does in these current conditions here. So currently we can see that we have exhaustion here. We made our previous week's high, our weekly high here. We're going to change this to PWH, previous week's high. You can see that the EMAs are crossing. Now that does not necessarily mean a reversal is happening, but that is a good indication that we may have a bearish move coming, especially if this area of intraday support is broken here, where this blue line is, where it says PDL, previous day's low. I'm going to remove the text, but this is important. PDL isn't accurate because it's not the previous day's low. But here we are. So we can see that we got a strong move up. There's a lot of volatility in these candles here, so if you're in the lower time frames, like the 1 hour, 30 minute, 15 minute, could have caught a lot of good scalp trades, a lot of quick good momentum trades. These conditions can be difficult to navigate, but also you can make a lot of money in these type of conditions if you know how to navigate. So you can see the market was ranging in these conditions, or in this area here, very volatile. Try to make a higher low at this point. We're going to see this wick rejection. But we closed bearish, and that's what I'm looking at primarily. This bearish candle that we currently closed on, this one here. Okay. I believe overall the most important thing that we need to be looking at is the high of this area here. So we're going to draw a minor area of resistance. This area is pretty crucial here because if we break above it, we're going to continue higher back into this previous week's high, into this area of supply. Now, if we break above this point, it's just price is going to continue extending and hit the 16000 price range, as well as potentially 1645, which is almost at the previous year, at the 2021 highs. So we may be testing that soon if we can break above the previous week high here. Currently, price is looking bearish and may want to retrace down to these levels here if we break below this point, especially with the EMAs crossing. If that is a good indication, a good confirmation that price may break lower, then we need to see another bearish candle and a strong move similar to this point here. You see how the EMAs are crossing. We saw a break of this support here and a bearish move down into this area of demand / fair value gap. However you want to identify it, that is what this area is here. As you can see, we had a strong bearish rally after that point, and then continued higher and made higher lows and used the EMA as support, and so on and so forth, as you can see. But overall, I do see a correction coming for the NASDAQ. Yeah, we may continue lower. However, I would not be too eager to sell quite yet. As you can see on the weekly time frame, we may hit the support, wick right off of it, or even slightly below it, where this wick is here. I'm going to draw a zone. May tap right into that, and price could quite literally push very bullish and take everyone out and continue higher. Trap these people in this, you'd call this internal liquidity. For those that trade smart money concepts or use liquidity concepts, there's a lot of internal liquidity here. We need to come down here or break lower or get pushed up to this external liquidity point. So overall, don't be too eager to jump in. Price is still bullish, but we may see a correction down to the 155. 15550 down to 1500 price range. Might not fully hit this zone, but that is where we potentially may be testing next. Maybe even 156, 100 points above that. But stay alert, we have a good setup coming up. Next, we'll be looking at gold here. So this was the trade that we took on gold. Gold had a very good setup last week, a very good buy opportunity, and to me it was very, very clear. We had a little bit of drawdown, but we overall secured, let's see, from this point our initial entry was 50 to 60 pips, and then our overall take profit was 120 to 110 pips, and price ultimately continued for another, let's see, we got out 78, and I'll just put the price range 2 on to make it easier. So if we got out 78 right here, price continued up for another $15, so another 150 pips from our overall take profit point. Gold was moving very, very bullish last week and was set to break out. As you can see where I drew these arcs, this was a break of higher time frame break of structure. So support was forming here, and I was indicating to the B.A.T Academy students that we may have a higher time frame break of structure here, higher low point, and we can see that this point of entry where we did get in, we had some drawdown initially. We got in right here where I called the trade. 1966 to 1967 was the entry point with a stop loss of 1961.5. I was going to make it 1962, but my gut told me that we may come down and tap that, and price literally almost did. It missed it by 15 cents, so a pip and a half. So that wasn't much. So I'm glad I had a little bit wider. But in this moment, you can see the EMAs are up. We can see that a higher low point was formed. You can see that price was bullish. You can see that price maybe was going to pull back, which we were anticipating, which is why, as I just stated, we had the stop loss further back. It's a breakout point here. Area of support and an area of breakout right here. You can call this fair value gap as well, but either way, price is looking to test this point to this point and continue the bullish trend. And as you can see, right after that, price continued to break higher after it broke this previous level of resistance and pushed very bullish up to this area of resistance and even higher, which we can see on to the right side. We'll go to the daily time frame here. There's an area of supply / previous level resistance that the market hit and rejected from. So let's extend this line here. Boom, there we go. See, perfect test. Now, what can we expect for gold for the coming week now that we've gone over that trade? And as you can see, it's beautiful. Bang. Okay, so what do we see here? Let's zoom out, go to the monthly time frame. You can see gold made a higher low point, strong rejection here. Let's see, this is not the previous, was this the previous low? Previous week's low is now this point here, I believe. Let me back up. Monday. Yeah, no, this is still the previous week's low. Alright. Monday. Yep, okay. Previous week's low. Now we're going to change this to, since we're not on the previous week's high anymore, this is the previous week's high. We need to identify that level we just moved this from as a major level of resistance. Because as you can see, we have multiple projections and it's a crucial area right at the 2000 price point. It's a strong psychological area. It's a very key, crucial area for gold to continue higher from. I'm also going to draw a zone to contain the wicks that were tested in that area. Alright, so what do we see? Let's remove this. Let's remove the risk reward tool. We see the EMAs just crossed. We had a higher low point. Strong bullish move right into an area of resistance. We can see a bearish engulfing pattern. That does not necessarily mean anything though. Let's zoom out, or zoom in a little bit closer, I should say. Onto the weekly time frame on the right hand side, we can see a bullish candle. We failed to sustain and break above the previous week's high, which was this candle right here, back here, which where the zone was at, where this blue level resistance is. We failed to sustain above it. We needed to break above this point. As you can see, we rejected from it. From here, it's telling me that we may have a bearish move coming up to start the week. we have a bearish engulfing pattern on the 12-hour time frame. Now that does not necessarily mean that we're going to continue lower. It just indicates that we have a bearish candle here and that we may expect further bearish price action. We can see that there's some type of support forming on the EMA. We can see that there's a level of support here. Also could be a change of character. But overall, we're holding it for now. I do believe we're still going to continue lower. For the short term to start the week. We have an area to look at, which is 1970. We may see a move down to 1970, which is a $10 decline down to here, and possibly even to the 1967, 1965 price range. Yeah, we have some key areas to be looking at here, but overall, price may continue bullish for the rest of the week, or at least for the start of the week, up until possibly before the day before Thanksgiving, and then Black Friday. We may see some strong volatility. But there is high impact news throughout the whole entire week, despite there being Thanksgiving coming up next week. So it's almost as if the market does not care, which typically that's how it goes. But yeah, I do see this potentially coming up. Move down to here or there. But if support is held right at this point, we're going to see a move back into the previous week's high and either break through and continue higher, or sweep the previous week's high and then have that bearish move down. We'll see what happens. But overall, gold is looking very solid, and this is something we're going to be keeping our eye on. Yeah, once we get clear direction, it does look like we're going to continue lower. However, it's a little too early to tell. I mean, on the daily time frame, you just see this as, yes, rejection, which is what we need, but it's not that strong of a body candle. It's very low volume. So there's some indecision here. There's more information, more data that we need. We can either move up and rejection into this area here, or we need a break above this point to take buys, or a bearish or a bullish candle here. Strong bullish candle here, break above this point here, and then we can take potential buys up into this area of supply, and then either decide to short or hold on to that trade and see if we can break up to the 2010 price range. We'll see what happens, but we'll be keeping an eye on gold. Next, we're going to be looking at odd USD, just because I haven't covered any forex pairs in a little while. Alright, let's update this chart color. Gold. Alright, here we go. So we can see that odd USD has a very strong bullish monthly candle here. We broke above the previous 2 months of bearish candles. We can see that last week we had a very strong bullish candle here that outdid the previous week's bearish candle. Let's take off some of these old technicals here. Now we are in this area here. We have a very big price range that price could potentially come down and fill, or we may hit this area of support here that was previous resistance, may come back and tap and continue higher. Okay, so when we go down to the 12-hour time frame, it does look like price has already hit that level as an area of support and attempting to break this area of resistance and potentially push higher. So that would line up with our analysis with gold too. However, just because the pairs are somewhat correlated does not mean that you should base your trades or correlate your analysis or trades based on that information. They are separate, and you need to treat them as such. Okay. Yeah, we can see a potential higher low point here is what it looks like. We need to break above that resistance, and if we do break above that point, our first area of interest would be right here at the 659 price range, maybe even 658. This area though, there's something here. Clearly, obviously you can see these wicks here. Price needs to come back and fill that point and potentially continue higher from this area. Going down to the 4 hour just to refine this some, and yeah, it looks like we got exactly as we wanted here. Let's adjust our current area of supply here. Okay. Overall, I see something like this for XRPUSD. Continuation up to 658, 659 price range. A stop loss could potentially be placed right below the previous 12-hour candle, slightly below it. Overall, you have a potential 2R trade, and potentially even more if she does break above that point and just continues moving bullish up to 6.7. If price does break above 658, 659, there's a clear range all the way to 657. I'm sorry, not 657, 67. If it breaks 658, 659, there's a clear range to 6.7. As you can see, there's some intermediary resistance right here that we could see reaction from 664, 665 price range, and overall XRPUSD is looking bullish. However, we could see something like this if price fails to break above these highs here, this resistance level. We could see something bearish to start the week, pull back down to 647, 648, maybe a little over, and then see that move up. Alright, now let's get into our last final two pairs. We're going to be analyzing Bitcoin and XRP. So Bitcoin here, still overall in line with the previous week's analysis and overall picture as I've been maintaining. We can see last week, or this week, the candle's still about to close in 1 hour and 12 minutes. There's been a rejection off this minor level of support that price has been holding for the last 3 weeks here, playing off of. You can see that there's somewhat low volume compared to the overall breakout that we had the prior week, or prior month I should say. But overall, price is in the middle of the chart and looking to gear up to make another move. I would be nervous to take shorts on Bitcoin here. As you can see, there is somewhat low volume, but price is continuing to push to the external liquidity range and possibly push higher. When we look at this point here, we have an intermediary resistance level here at, you can call this an intraday level as well, at 40,000 though. There's something at the $40,000 price range, and price is looking to move to that point. It's almost acting as a magnet right now. Bitcoin is headed to 40K currently. You can see that when I go to the weekly time frame, strong buyer's exhaustion. I'm sorry, seller's exhaustion. The buyers are buying this candle up, pushing it higher. Strong wick rejection there. That's what you'd want to see. But you can see this price action isn't the prettiest. It's a range. It's consolidating, low volume, choppy. It looks like it's going to go up, but also could look like it's going to go down. So I would not advise trading in this range here, but possibly on the break of 38,000 or right below 38,000. Stop loss below here, and just this is the best risk to reward. But it is a high probability trade, so it really depends on your trading style. Could even extend it further up to 42,000 because Bitcoin likes to push a little more than rejecting off these key levels sometimes. So you could see something like this, and then a rejection. But the $40,000 to $42,000 price range. 42 is 1.75, 41,000 is 1.3 R trade. So when you go to those targets, it's a better risk to reward. But overall, price is gearing up for something. A move is cooking up. It's definitely look like it's going to push higher though and break that resistance. Lastly, XRP. So when we go to XRP, we'll start on the weekly time frame here. You can see that we rejected off this area of resistance. We created a bearish candle, but we also are creating price action and respecting this level of support here. You can see that there's a level of demand, or an area of demand, where price is respecting and orders are being filled, and we can see that price may have a move upcoming soon, a bullish move upcoming soon. We can see this daily candle here is gaining some momentum. It has outdone the last 2 days of price action, and overall we may be having a potential move up to the 70-cent range once again, and potentially beyond that point if we could break above this area where we have just rejected from. So I'm going to move that over there and add a new area of supply, because this is where we are currently for the current price action, and where price needs to break through for us to line up with the overall higher time frames. So when we zoom out here on the weekly time frame, if this does continue bearish, we could see a move back to the 55 cent to 50 cent price range, potentially lower to 45 cents. However, this point here, we could see support being formed at the 60 cent to right below 60 cents, so 60 to 57 cent price range, right in this zone here. And if price does continue bullish, this opens us up to the possibility of breaking the 70 cent point, 75 cent area, and continuing up to 90 cents and possibly even $1. Now this is all speculative here, as we do have low volume, and it does look like we need a little bit more for that move to happen. However, if Bitcoin keeps driving up and goes to 42,000, XRP is going to follow it right as well, and we may see a significant move for XRP as well. Last week we had a strong little move up to 75 cents almost, and then it rejected very quickly, and that was just in the span of a day. So that can definitely happen in a day next week as well, especially if Bitcoin wants to continue moving bullish. As you can see, that just be another 20% day, which is pretty typical in crypto. And if we extend that further, we go to 80 cents, 30% day, 90 cents, 45% day. And if we get to that point right here, 70 cents, breaks higher, 30%. So the price movement is between 20 and 45% in a single day. That's not, or in a span of a few days, that's not unrealistic by any means, because that's what this market does. But alright, I hope you guys have a fantastic week. Use this information to your advantage. It's going to help you a lot. Use this analysis to help guide you. Remember, nothing's set in stone, and the market always moves how it wants to. So sometimes you may have to adapt your analysis to what the price is doing and what it's showing and what the market is doing. But overall, I wish everyone a great week. And if you have not joined my Telegram channel, the link is in the video description. I send almost daily news and analysis, as well as motivation and other news resources to help you grow and develop as a trader and become an independent trader, to do this on yourself, to help you grow to be an independent trader so you can do this on your own and be able to do your own markups and have your own analysis and read your own charts and be able to make your own moves. That way you can make a living from this and, buy yourself a lot more time. That's the end goal in this. That's why we're all doing this, to have more time and more money. But alright, wish you all well and have a great week. Peace.